Hello guys, and welcome to my journal for Wednesday the 23rd of December. My name is David and I'm also known as the Spread Doctor. This is going to be my last journal before Christmas and probably my last journal for 2020. My next journal is most likely going to be on the other side of 2021. In the equity markets today, most of the indices closed slightly higher, with the exception of Nasdaq, which closed lower. The Russell 2000, the small cap index, was the outperformer on the day. It closed at an all-time high, and it also closed above the 2000 level for the first time ever. It ended up closing up 0.87%. There was a major development in the equity markets today, in the market structure if you like, and that major change might not have received as much attention as it deserves. So the Securities and Exchange Commission, the SEC, approved a request from the New York Stock Exchange, and the request was for primary direct listing as a way for companies to go public on the NYSE. The traditional way for companies to go public on NYSE is via the IPO route, and the company would usually enlist the services of a Wall Street investment bank that would underwrite the IPO and then take it public. So this is a major paradigm shift on Wall Street, and it will be a dilution of the dominance of the Wall Street firms and the grip they've had on the IPOs on NYSE. It also means that Wall Street firms might see a drop in investment banking fees for underwriting and for taking companies public. And I don't know if there's a political angle to this. I don't live in America, but I suspect SEC might not have approved this 2 years ago, with Trump still having 2 years left in his administration, and maybe it's assumed that a Biden administration would not prevent this from happening, but that is just a thought. Another important aspect of today's approval is that the companies that choose to use a direct listing will be able to raise capital with the direct listing. So currently, I think Nasdaq allows companies to list directly, and there have been some. Spotify did a direct listing. And usually companies that use a direct listing to come to the market would have a lockdown period, and they would not be able to sell their shares on day one to raise extra money. Only prior shareholders would be allowed to sell stock, but the company itself cannot issue new stock when they list directly. And this was seen as a sort of deterrent, if you like, because most companies that go public do so because they want to raise additional money. So in addition to existing shareholders, they would also like to issue new stock to raise some money. Well, today's approval now means that companies can list directly on New York Stock Exchange, and they can sell stock on day one alongside the existing shareholders. Now, I know there are many pros and cons for both the company listing and the retail investor with this direct listing, but that debate is beyond the scope of my journal for today. We can have that debate some other time. Moving on to the VIX. The VIX was down slightly today. It was down about 1.5% to close at 23.31. So the VIX, it continues to consolidate above the 20 level. Even as the S&P hit a new all-time high earlier this week, the Dow hit an all-time high, the Russell hit an all-time high. The VIX is still stubbornly consolidating above the 20 level. I had no new trade ideas today, and my window for selling spreads in the January contracts remains closed. Moving on to my open positions, I now have 2 open positions, one in Moderna MRNA and one in BMRN. The PDD position closed out, I think it was this week. Yeah, closed out yesterday actually. So that position is closed. I've now got two positions left, one in BMRN and one in MRNA. I'll run through those positions, and I think I'll spend some time on the MRNA position. So the position started out as a put spread, the 115-110 put spread, and I got a credit of $2 for it. And then I adjusted the position into an iron condor by selling the 165-170 call spread. The recording for that trade idea, I explained why I decided to make that adjustment. So my total credits for this position is $3.06. So the $2 I got here plus the 106, the spread is still 5, 165, 170, 115, 110, and the market can only close in one place at the time. Let's see where MRNA closed today. So today MRNA closed at $130.34. My short 115 put is out of the money, and my short 165 call is also out of the money. But this only tells half the story, because MRNA was down 10% yesterday, and intraday today MRNA went as low as 115, which is my short strike. So it touched my short strike, but then the buyers stepped in and moved it higher. So last week Wednesday, Morgan Stanley downgraded MRNA from overweight to equal weight. Jefferies also came out with a downgrade, and they slapped a price target of $150 on MRNA, and at the time it was trading in the low 140s. By the end of last week, Barclays also came out with an upgrade, and they slapped a price target of 160 on it. So after the initial 2 downgrades, there was some profit taken, and this was around, I would say from around here. There was some profit taken, and it drove the stock lower. And the selling accelerated yesterday. So this is yesterday's price action, this one here. And that happened on above average volume. But the buyers came in today and they moved the stock higher, also on above average volume. And the volume that moved the stock higher today was higher than the volume that took it down yesterday. So that is where we are today in terms of the price action. In terms of the news moving the stock, today Canada approved Moderna for mass immunization in Canada, and not too long ago Moderna came out with a statement that its COVID-19 vaccine will protect against the new variant found in the UK. And it also confirmed that it will be running some new tests to confirm that the vaccine does protect against the new variant. So that's where we are in terms of the price action, and those are the news items that are kind of driving this thing all over the place. I expect some more volatility in Moderna, and although the stock got a bounce today, so this is today's price, this last candle here. Although the stock got a bounce today and it was higher, I won't be surprised to see the price come back and retest the low of today, which is around 115. and I won't be surprised if it goes as low as 109. So the buyers took charge today, but if the buyers run into some selling pressure above here or around here, then they can easily take it back down to retest the lows, and they could take it down to around here. And the reason I mention this is that I don't want anyone to panic next week if you suddenly see Moderna trading around 109. So next week is going to be a quiet week in the market with very low volume, and it would be a perfect time for the market makers to run the stops. And if you're a market maker and you want to run stops, here would be a logical point that you'd be looking at around here. And that's around 109.20, 109.29. There's a gap here, as you can see here, and so here would be a logical place to put a stop if you're long and you want to get stopped out, or even if you're short from here and you're looking to take your profits. Here would be where you'd buy it back. So there are bound to be some stops and some kind of buying pressure here, and the market makers who are working over Christmas might just take advantage of the low volume and run the price down here, run all the stops and their commission, and then the market can then go back higher. So that is what I'm thinking. And should MRNA drop to 109 next week, I don't plan to make any adjustments over the festive period, mainly because the option spreads are going to be really wide. The market makers, they're going to widen their algo spreads for the quiet period, and that is to prevent them from being hit with someone looking to take advantage of the quiet market. So that's my plan for MRNA. It did get a bounce today, but I won't be surprised to see the market come back to around down here. And should that happen, I'm not going to make any adjustment unless it comes down here and it continues to go down. But if it comes around here and consolidates and then moves back up, that seems to be a more likely scenario. So that is my plan for MRNA. The other position I have is in BMRN. On this one I sold the 70.75 put spread for $1.13. Let me see where BMRN closed today. So BMRN closed at $88.30. My 75 put is out of the money and no action is required on that one. Let me have a quick go through my watch list. I've got EBS, ARKK, JKS, BMRN, and SRPT. First one is EBS. $95 stock, implied volatility 60.5. ARKK, $134 and implied volatility 59. JKS, $80 and implied volatility 53. BMRN, $88, implied volatility 52, and the last one is SRPT, $178. Wow, implied volatility 95. And that brings me to the end of my journal for today. The main highlights, this is probably going to be my last journal for 2020, and please don't panic if MRNA breaks below the short strike of 115 over the festive period. This is the end of year 1 of Vertical Spread, and it has been a good year. Joe and I would like to take this opportunity to wish all our members a Merry Christmas and a happy, healthy, and normal 2021. And the same goes to you guys who are watching this journal on our YouTube channel. A Merry Christmas to you, and hopefully you can join us next year and sharing our success as our community continues to grow. Thank you very much. Goodbye and Merry Christmas.